The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Hi, folks. This is Basil Chapman sitting in for David White, and I just happened to catch a question whether I'd be able to sit in for this hour, and but purely by chance, I happened to look up, and there was the question. I said, absolutely. Love to do it because I'm busy preparing, in fact, continuing to prepare for my webinar coming up Thursday, the 19th of February. And what is it on? Right here, you'll see it. It is on free newsletter and webinar by Basil Chapman. Get a free month of the opening call and get access to Basil's subscriber-only webinar on February the 19th. The 1929 market, then and now. You see those ticker tapes? See the glass bubble? Wow, the technology just came of age as the 1929 top was forming. Now, Dave is really one of our gurus here at TFNN in that he discusses technology, future technology, past technology, just has a wealth of information about all of these areas. So I'm kind of treading lightly here because I do not have that kind of information access at my fingertips, or at least in my mind. Certainly you can get them at the fingertips, but you're going to need to know what to look for. But that's not the issue. The issue is, if you recall, back in the year 2000, for those of you who were in the market or watching the market at that particular time, the major top was made in March of 2000 in the NASDAQ and the QQQ, the NDX 100, and the S&P and the semiconductor index, which actually was just a little later, but just in that particular period. And if you recall the technology, and I've watched this for years, I remember way back in the 1994 period, was it, where they discussed how the New York Stock Exchange had just built this huge network. Oh, it was back before 1987. Just before 1987, they built this huge network which could take an unbelievable number of stock quotes and requests of buys and sells, etc. And what happened? It failed miserably in 1987, October the 19th. And then in 2000, what happened is, about October of 1999, the NASDAQ built that incredible building in Manhattan. It's still there, where the logos of all the NASDAQ companies go around the whole building. It was beautiful, beautiful technology-wise. It was an amazing thing. And I have a rule of thumb that within 3 to 6 months of any major change like that, you've got to be very careful, because whatever instrument you're looking at becomes highly vulnerable, and that is exactly what happened to the NASDAQ. So I've followed this for years, and in 1996, I think it was. I was going to swing around because I had the poster somewhere. The Burj Dubai, which became the Burj Khalifa. No, that was late. That was 2006, was it, or 7? As it opened, the world's tallest building, they had to close the market. Burj Khalifa. They changed the name the week of the opening because there was such a mighty crash in the market. And it happens. Empire State Building, 1929, papers signed 3 weeks or 4 weeks before the major top in the market. So these are things that I'll be talking about. These are things we'll be watching. Is there an exact date of a top, a major top? Well, I'm sure there is a date, but I do not know the date. I don't think anyone actually knows the date. Oh, they might have a particular model. They might have a particular technique that gives them some kind of Fibonacci extension, or it might give you or I use left side, right side price matches, and etc. But we don't know for sure, but what we do know for sure is that the hysteria in 2000 of people buying stocks at 9:15 before the 9:30 opening and making almost an entire year's worth of profits or losing was very unusual. This is before the market even, and let alone let the stock let it be announced that the stock was going to split. And let alone be announced that the stock was not going to split for 2 for 1, but 3 for 1. And it was extraordinary. So we are not in that particular hysterical market phase. And that says to me, that means we've got time. How much time? I'm not exactly sure how much time. But the outline that I gave this morning, and I'm going to be giving some kind of an outline of where the overlap of a chart pattern has begun in our market today, in the Dow and the S&P, and with the relationship of 1928 going into 1929. There is a relationship in patterns. Doesn't mean that you can count the number of days to the exact top. No, absolutely not. It's only a pattern. But what is really important about it at this particular time is the number of queries I had to my source, my opening call, or to me in particular, just queries about. I have a portfolio. I also have some newsletters that I subscribe to. My longer term accounts are kind of fixed accounts. There's not much I can do. So I'm in them. Is this a time to lighten up? Is this a time to increase? What should I be doing? And these are the kinds of things I'd like to just touch. I'd like to give at least my input. There's no guarantee, of course, but I'd like to give my input and to say, hey, this is what I'm looking at. And these are the things under these conditions, these market conditions right now. That's what I'd like to discuss. How does it relate to where we are now in socio-political economic terms? Is there a correlation? And in many, many ways there are. Look at the art. What did I see just a short while ago? The prices being paid for artworks. This is normally, these are signs that we're entering an acceleration phase. So I'll talk about that now. Market-wise, let me just run this down. The Dow is up 5 at 17,977. The S&P is about unchanged here, up a half a point at 2,089. The comp index is up 12 on this Friday the 13th of February. And you've got a very interesting phenomenon going on here. Gold was up quite a bit more, but it's only up. I shouldn't say only up. No, I'm going to say it's only up 7.5 points at 12.28 right now. To me, that it's kind of telling a story, because if that whole Greek debacle, if that whole foreign markets and the whole issue of uncertainty, I like to say, I've said this is an expression of mine, I've said it for years. People say the market hates uncertainty, and I say, what? The market loves uncertainty. What the market hates is uncertainty about uncertainty. And what that means is when the market is unsure of the next uncertainty, that's when we start to get decline, lower lows and lower highs. But when it's just kind of normalized and the tide, the basic pressure of buying with the VIX index, the volatility index, which is now at 15.32, in the 15s and the mid-teens to the low teens, is good. That's important. Steve Rose gave a really very fine webinar on the VIX index. What is today? Friday, on Wednesday. And I discussed historical, I should put it this way. He took the historical context of the VIX and he clarified and he gave percentages, and it was very interesting. I've always used the VIX. I mean, I couldn't even tell you how many decades I've used the VIX for other purposes, but basically every single day in my opening call, my daily service, this is the chart. I show the Dow chart and where we are in the Chapman wave methodology. But most importantly, this is what I show. These 5 quintiles. The 120-minute chart, the Dow just made a peak D in the Chapman wave. You look for Ds and you say, hey, got to be careful at a D. Doesn't mean you're going to turn down sharply, but that's where it can and often happens. So we're watching this peak D right here, the 120-minute chart. We're watching a little bounce off the lows in the 1513 was it? 1518 level in the VIX index. So it could bounce a little bit here over the weekend, maybe into Monday or Tuesday. This is the short-term trading index. I use it just very specifically for very particular numbers, nothing like Richard Arms uses it, who's the creator of it. I just use it for numbers. And this is the Dow right here, the daily and the Dow, the S&P daily. The S&P, now this is what I want you to talk about. The S&P has gone to an all-time high. This is the E-mini. And that is the weekly chart right there. This is the daily. It stopped right at the 2088.75 left side high, the lip on the left side. Today's high is 2009, just over 2092. No, it's just on 2092. We're trading at 2086 right now. And it's really important to me. Actually now the missing link is the industrials. The Dow Industrials have gone to a leg B in the daily, and they failed so far to go to the peak D that I'm anticipating. Now, that's really important. It's actually very good because, for me, it's good because there's a certain synchronicity that I want to look at, and that's occurring right now. But the Dow Diamonds, which is a trading vehicle, and this is why those trading vehicles, sometimes they're accurate, but if you're really trying to pinpoint exactness, combine them together with the S&P SPY and the Dow and the Diamonds, you'll find that occasionally they miss out a little bit. And in this particular instance, the Dow Diamonds have gone to a peak D in 120-minute chart, leg B, doji candle forming right here in the daily, and the Diamonds have gone to 180.70. What was yesterday's? 54. Hey, I thought they went to a new high. What happened? Between yesterday and today, I've been looking at this so closely. 180.54. Oh, they did not. The Dow Diamonds have not gone to a new high. I do not get to see. This is interesting. Okay, misread it early this morning. Good. So now the S&P. So let me explain what I'm looking at. I'm expecting that the Dow Diamonds do get to leg D at 180.72. They just need 1 penny further to go to that leg C. The S&P SPX has gone to leg C, today's high, 2092 on the, no. 2000 and, I'll tell you in a minute. 2094.74 is above the 2093.55 previous high of December. And that makes leg C. And it says that this trend line that we're watching right here, this is a trend line from, that goes all the way back. I'm going to show it in a moment because it's quite an important trend line. All right, I'll be back. There's a break. This is Basil Chapman sitting in for Dave White, the Honorable Dave White, and I'll be right back with Quentin Martinez, California.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Looking at, let me move this away just so I can finish because I'd like to go to Brenton Martinez. But first, let me just say that bonds are down 22 seconds at 146.04. We've got crude oil up $1.22. I'll talk about that in a moment. Natural gas, I shouldn't have said natural gas because I don't have it in front of me, so I'll just do NG. And NG right now is up 0.071 at 2784. Within a trading band, just a little narrow band, trying to form some kind of support at the bottom there. So the UNG is the same thing. UNG, yeah, nice good candle today. Needs to break out. It's at 1392. It's at 1422. Needs to really break into the 1478 to 1502-ish area. That'll be very good. All right, we're going to go to Brent in Martinez, California. Brent, how are you?
I'm doing well, Basil. This is a pleasant surprise. I wasn't expecting to hear your voice.
Well, neither was I. So we're both pleasantly surprised.
I'm calling about, I've got a new one for you.
Yes.
I'm long this stock at 2450. It's Silica Holdings.
So this is Silica SLCA trading at 29.62 up $1.05. Silica, U.S. Silica Holdings, specialty mineral, commercial silica, and it's used, I guess, in oil and gas components or something like that. I'm not really sure. Well, what do they do with it?
I think that's the reason it's down so sharply, because they do use the sand for the fracking.
Oh, okay, good. Just right as you said that, we've got Z in the den and said, frack sand, baby.
Yeah, but it's not all they use it for. I was going through their financials, which I don't normally do a lot of the fundamental aspect of
Right.
it, but I kind of like this company, and I looked at their numbers, and very solid company, and it's used in a lot of different applications. That's one of them, and I think that's why it's down so hard. But there's many other uses for it.
Well, it's interesting that you said that. I have some interesting weekends, and then I meet people and I have conversations, and I'm just terrible at remembering these conversations. I come in Monday and I'm just like a fresh little baby having woken up. I don't reflect. I just look what's ahead. But over the weekend, I actually had, now that I'm thinking about it, I had some very interesting conversations. One was with a young woman who works for a shipping company. And it's not a U.S. Company, but it's got a U.S. base. And what's really interesting is that she said that, yes, they've been impacted by the oil slowdown, because a great number of their products that they would ship is from the oil industry itself, the components, the engines, whatever it is, drills, and that they were doing okay, but it had been a slowdown. And as she was talking about it, I said, that is so interesting, because as I reflected on the chart patterns that I would normally be thinking of rather than on words, the chart patterns were very interesting. Think of the different shippers. And I asked about dry bulk. She said, yeah, I suppose you could call it dry bulk, but of course that really wasn't dry bulk, because it wasn't the kind of commodities that you ship in dry bulk. But at the same time, I can see that this company, and right now I'm showing the monthly chart of U.S. Silica Holding Company, SCLA, had made a low back in July of 2012. It made a low of 8.52. Let me just type that in, because it's going to be very interesting. 8.52. And it went up successively. And this is just a perfect example of the Chapman wave, in that it went to peak A. That was September of 2012, 15, 17, pulls back to that black line, the 9-period moving average, spikes up huge, goes to 28.50, which is exactly about where it is now, 28.50, and that was in March of 2013, pulls back again, makes a cup formation, walking the 9-period exponential moving average, and whoop, it goes to leg C at 37.14. Pulls back again, also for 1, 2, 3, 4, 5, 6, 7 bars to break out. Here it goes, 1, 2, 3. The 5th bar is the breakout as it accelerates higher, and then it has a move that goes from the low of 24.28 to its all-time high of 73.43. I couldn't find my sneeze button. Sorry about that. And then what happened is it's 73.43. Let me type that in. That's a very ugly candle, because it had a beautiful candle just the month before. Very ugly candle. And then it breaks down and it slides all the way to 22.71. So I think your timing is great. I'm going to be back with you. Can you hold?
Absolutely, Basil.
Okay, great. So we're going to be right back, and we will talk about, with Brenton Martinez, we'll talk about SLCA, U.S. Silica Holding.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Because you're talking about within the Chapman wave construct, which means that from the most obvious lowest low bar, in this case 8.52 in SLCA, US Silica Holding Inc., that was the low back in July of 2012, you merely want to count each successively higher peak, and a peak is just that, one side's going up, the other side's going down. And they're higher than the previous, and they're alphabetically labeled capital A, uppercase A, B, C, and then a D. And then what happens? The stock comes apart, and not only does it plunge, it plunges below the 9-period moving average that was that fantastic support on the way up. That's now resistance at 37.22. Of course, Brent being long would love to see 37.22, 6 points higher. But the way I'm looking at it here, the candle that is most important is this, what I call the silent doji at this reversal point right here. So that is, in December, the low was 22.71. There was a fractionally higher 22.96 higher low bar in January, but a very tiny plus sign candle, that's a doji candle, and then a very strong February so far. The month is not even halfway through, so this is just so far. But what's really important is that it tends to take these candles and treat them as reversal points, even if it's just short term. So in that case, or in that basis, that's a good sign. But the MACD and stochastic, the two moving averages that I consider to be very important, are not showing any strength. A little bit of strength in the stochastic, but not much. Now what's important is that the weekly chart, like a number of charts in the oil and gas average, that golden line right there, which is tremendous resistance. It was support and then it failed. That's going to be key. And the MACD hasn't yet crossed positively, but the stochastic has very slowly been improving. It's at 15%. Nothing's really going to happen until it gets to the 20% area. What I mean by nothing, I'm talking about sustainability. Now, what's important is that the daily chart, you've got yourself a nice entry point and you're looking good. The daily says that I should go down to leg D in the Chapman wave. I tend to do that. I've done it in the monthly chart. No reason why I don't do it above 30.58 in the daily chart to go to a leg D. But this is what I'd be watching real closely if I was you. If you have enough to take a little bit off on each higher peak and then put it back and you can make a number. You could take a number of $1. In other words, you're trying to take out $1, some profit, and then $1 later, as it pulls back, you want to go back into it, even if it goes lower than that, because you're trying to keep a core holding and use a trading position for each higher peak. That's one way to do it. I'm going to say to you that for U.S. Silica holding, the most important candle is the candle that actually leads towards the 38.10 level, because that's where it broke down on the 28th of November and plunged to 30.17. That's the candle. Yep, you can see it right there in the weekly chart, and that's the candle that would take you to the 37.21 level in the 9-period moving average. I suspect from the little takeoff that we've had, where it looks like a stair-step move to the upside. Actually, I chose that low. This is an A-, and this is a restart. And let me just do it correctly in the Chapman wave notation. That is A-. And this is restart. I don't know if you did that in your own work, but this is a restart right here and a successful one. And that should take you, everything about it says it should go to D, and D in the daily, and D would be about 30.58. There's just one thing that I would say to you, that if it breaks under 26, I'm not sure you'll be there long enough, but if it breaks under 26, a close under 26, and I would start to say, sideways rectangle formation. We've seen these before. So that's the only warning that I would give you. 2.5 points lower, and then it's going to say, oh, man, that weekly chart just doesn't have the strength. Monthly chart doesn't have the strength. It probably needs to hold 24, and it needs to hold it for about another 2 weeks before it can break to the upside and retest the highs in the 29s to maybe 30 area. That's the way I would look at it. I think you've got a great entry point, because now it's up to the stock to tell you've done your homework, whether it has that internal strength. The stochastic and MACD on the daily are good, but I don't like when they take too much time to the side, because I know that pattern becomes a lowercase h, and then it becomes a lowercase m, and then that m goes into a continuous, so it's like a little snail walking along there. So that's the only thing I'd say. You got a great entry point. How you can keep it going is going to be really important.
Thank you very much, Basil. And by the way, I'm still long U.S. Steel and doing very well. So.
Congratulations. That little pullback that it had there was just a minor little blip. And that, you see, this has changed the pattern for U.S. Steel. And this is what, when people have asked me, wait, what's going on here? Well, I mean, how can you be positive? How can your market perspective be positive? I say, because the rotational aspect has been very important to the market since it turned around in March of 2009. And when I noticed in 2010 that there was a sideways consolidation, I said to myself, rotational aspect is really important to corrections. I don't know if it's going to continue that way until it makes its major top, or at least major top for this phase of the 6-year mega bull market. But at this particular point, when you've got some leadership in the autos and you've got it in U.S. Steel, AA was doing fantastically, Alcoa. Now it's just kind of stalled. I don't know if it's just a stall. See, the pattern I'm looking at here in Alcoa is the one, it's not exactly, but it's got that similarity to the U.S. Silica, in that it looked good, and then it went sideways, and then it just kind of petered out. It just didn't have that sustaining strength. That's what I'm saying to you. At that point, 26 is that important support. In this case, the 15.21 area now for Alcoa, because that's the 200-period moving average. But boy, I mean, I keep kicking myself because I wanted for my subscribers to grab onto USX. Now it's gone to leg C. Now I'm in between saying, well, I better hold 24.69. But if it happens to go to 26.75. there's a real good chance it's going to go to the 200-period moving average of 29.38. Hey, nice move. Another congratulations. Have yourself a great weekend. Thanks so much for calling.
Do the same, Basil. I always appreciate your help, and just have a wonderful weekend, and I'll talk to you soon. You take care.
Thank you very much. A wonderful snowy, and yet another snowy weekend here in Boston, Mass. Amazing how much snow we've had. Okay, so let's do a couple of things here. I thought this was a good time, as I was doing this, to go to some areas that I don't look at very often. I'd like to look at Aetna. Aetna in the health insurance, comprehensive and global, trading right now at 95.97, down $1.11. So using the Chapman Wave methodology, that C continued. Remember, I'll just explain this. In the Chapman Wave, as long as you're in a leg up, you keep that notation until it stops. So this is leg C, leg C, leg C on the, what date is this? On the 23rd of January at 96.25. Woof, next day it pulls back, goes all the way back down to 90.20, but is still in the buy mode. And that says you should get, remember what we discussed in the Chapman Wave, you should get at least a D if you're in a buy mode. Boop, it pops right up there. Look, D. And then it turns around and it stalls again. At 97.71 on the 5th of February. And then yesterday it had a move to try to get back there. Today it's stalling. It looks like it wants to retest, and the MACD and stochastic are working very hard. But it's the weekly chart that says, hey, I've gone to a leg E almost certainly this week by 4 o'clock today, another hour and a quarter. And don't forget, you got the Tom O'Brien show coming up straight after me. It should be a fabulous show, as always. And let me just go to this. Yeah, you've got D, peak D, and you've got leg E. Now, it might have even recycled, but I'm calling it E right now. The MACD, the moving average convergence divergence. These are technical tools that Dave doesn't use, but I do use them. Is very strong. It's way above the 9-period moving average support in the weekly chart of 92.22. The stochastic has started to turn down, but it's still at 85%. That's the red and green lines over there. And this blue line is the unbalanced volume in leg E, corresponding to the weekly chart, and still very strong. But the real issue is in the monthly chart. And the reason why I wanted to look at it is just struck me the other day. I saw the letters go by, AET, and I thought, I haven't actually looked at it for a little while, which was proof of the pudding was right there, because peak C, leg C was still working its way from the 20th of January. So I just updated it. Now, what do we make of the monthly chart? And there's a technique that I discovered years ago. When I say years ago, I mean decades ago. It's called the Chapman Wave Instant Restart. When you get to the fourth highest peak, sometimes there's a recycle of the buy mode. And what happens is, within 3 bars with a certain chart formation, if there's a breakout to a new high, it doesn't matter whether it's a 1-minute chart or a long-term monthly chart, it's the same principle. Remember, these are fractals of a particular chart pattern. They can happen in any time period, on any tradable. And in this particular instance, you went from a high of 76.71 in March of 2014, had a lower high of 75.99 in April, pulled back, touched the 9-period moving average, closed negative, and the very next month used that 9-period moving average as a springboard to move higher, and you went to another peak. I called it peak E. Theoretically, I should have called it, because of the MACD and stochastic at that time, I thought, there's a good chance this could go to a G in a particular pattern that I often follow. But technically, what I'd normally do is I'd go E, oops, that was a mistake. E, edit, put that on the side. I go E/A. Oops, A. And that says it's very bullish if it's an A, not that bullish if it's an E. Let's see what's happening. Of course, on October the 15th in the morning, you'd be seeing it hitting that trend line support and breaking it, and you say, oh my God, get out of it, get out of it. By that afternoon, you'd be turning around and say, whew, thank goodness I didn't get out of it, because look at that nice spring back, and by the end of the month, you'd say, whoa, that is very strong. And look how it looks like just a momentary market interruption of a move that was rocketing higher, and now it's gone for 1, 2, 3, 4 successively higher highs, and this gets the notation in the Chapman Wave of F/B. Do you have to say, oh my God, B is really bullish, F is, whoa, be careful there? No, you don't have to get excited. You just say to yourself, okay, the MACD, the moving average, is still very strong. The stochastic is at 90%. I don't have to do anything based on the monthly chart just yet. The tide is still coming in. Looks outstanding. Let's go to the weekly. Well, the weekly MACD is still good. Stochastic saying, be a little careful here. Watch the price, because price is the arbiter of a trend, not just the technicals. The question was, why couldn't it be leg A? Because the question that is, why couldn't it actually be leg A after a peak E? 3 reasons. One is the MACD did not cross negative. That's number one. Number two is the alternate count using the instant restart in the monthly gets me to leg B quicker. I don't want to be hanging out at leg F/A when in fact I'm B, because that means when I get to a D, real D, I'm actually only at C, and I can be fooled. I'd rather be conservative and deal with that than to be aggressive. So the Chapman wave, you're always looking for the most conservative notation. So it is an E at this particular point, although all the characteristics are there to say there's an instant restart. Could be E/A. I don't have to even be thinking about it. Why? I'm really going to be dealing with the shorter term, and that is the shorter term weekly. Shorter term daily, that's what I meant to say. And in that particular instance, it's holding quite well the 9-period moving average, and I would then grab a 120-minute chart. I'm not going to do it now, but this has gone to an A, B, C1, C2, so which says that, yep, it's under the previous high. Yep, it could turn down here, and I would start taking, if I own the stock, I'd say, okay, it's a long term, it's a short term. If it's very short term, I'd be out right now, or I'd put my stop at 96.01 is the price. I'd put my stop at, what was today's low? 95.82? No, I'd put it here at 95.47, the 9-period moving average, for at least some part of the position. If I was saying, hey, maybe we're going to get a pullback for a day or two early next week. So I'd just be careful. But if I was long this, I wouldn't do anything. Long it from much lower down, I'd say it's acting beautifully. It's participating in the general market rally to new highs, to new all-time highs in some sectors. So that's it. So I just wanted to grab the stock and say, hey, let's just see where it is and what it's doing. Why? Because I've been trying to garner information about sectors that have been moving commensurately higher to all-time highs with the market, and those that are failing to do so. Why? Because it's going to tell me on the next big pullback, if the stocks that are showing really good strength only pull back mildly, it means that they should continue higher on the next move up. And the ones that are acting weakly right now, that had been strong, they're saying, watch me closely. There's distribution going on. I just can't handle the higher moves. I'm starting to fail because the support, internal support, is starting to weaken. Okay, so I thought I'd just go through those things. There's no trading or anything other than to say that Aetna's acted very well up to now. If it holds a pullback between 95.47 and 94.88, those are moving averages that I use and consider them to be important, then I think a rectangle formation is forming, and that's why I would just hop out here on a very short-term basis. I would be trying to enter if the bar of the 9th of February with a high of 94.60 and a low of 93.38 becomes the support, because then you've got a rectangle formation that says, hey, watch me, because I can turn around and form a rectangle formation and give you a very nice trading range between 93 to 96. I'll be back.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Hi, folks. This is Basil Chapman sitting before a Tom O'Brien Show, sitting in for Dave White, and my pleasure to be here. Of course, the Power Trading Hour. And just wanted to mention one time again, as we're wrapping up here, that I will be doing a webinar. Let me just go to the front page there. Front page of TFN, you'll see it right there. Free newsletter, a webinar by Basil Chapman. Get a free month of the opening call and get access to Basil's subscriber-only webinar in February. That's on February the 19th, the 1929 market then and now. And what it's really going to be discussing are similarities, dissimilarities. It's going to be discussing the chart formations. I'm going to be discussing the socioeconomic, political aspect. It's going to be, I'm really looking forward to it. I've been working on it. I actually have to do the whittling down now more than anything else because there's just so much information. But I don't want to put in any information that is not pertinent. And what it is pertinent to where am I now? What do I own? What are the things that would be impacted by the market having an accelerated move up? What would be impacted? Let's just say I'm wrong. I'm only just a human being trying to do my best. What if there's a wrong assessment? What in the marketplace could say, hey, don't listen to that guy because the things that he told us about to watch for the market going down are now more prominent, or the things that are talking about going more up are far more prominent than what he's talking about, because sometimes we miss things that are right in front of our faces. But I want to give to you that information. I want to say, hey, if you're along and you're along in a certain way, there's no problem. But you've got to be careful. And sometimes going to what could be at the top of a market, you don't know when it's going to be, you want to whittle down and have less and less exposure. But sometimes you turn around and say, geez, that was dumb. We were so bullish. Why didn't we make it 100%, 200%, 300%, 400%, 500%? And then you're ready, because if you have even 1,000-point pullback in the market, you're up so much it just doesn't matter. You could get out at that time. That's where you talk about hindsight. That's where you say, oh, I should have, could have, would have, should have. No. You have to do things in a very orderly way, and you have to be looking at it to say to yourself, in the construct of what I'm looking at, what is the risk of being wrong? And that's really what I want to talk about. And then I'm talking about the market. I'm talking about, hey, what about those bankers? What about those 4 bankers that were very, very instrumental in creating the rate interest rate factor that went into the positives and then the negatives of the market in 1929. Ever heard of that? I hadn't heard of that until about 2 years ago, a year and a half ago. Very interesting, so interesting. Behind the scenes, there's always something going on behind the scenes that us layfolk either never get to know about, or all those bankers that in 1929, the crash, remember, you read about the Black Thursday, and you read about these markets coming down, huge percentages, and then you see a little report that says Morgan was buying in the morning, and then it doesn't say Morgan was selling 30 minutes later, but he let everybody know that he was buying. He put those orders out to all these different sources to say, Morgan's buying 1,000 here, 1,000 there, 10,000 here. Never said a word about getting out after the bounce every day. It's very interesting. All right. So with that said, let me just tell you that I'm looking at, in terms of the market, we're getting real close to some kind of a pretty good pullback. But I think February, at least next week, we're going to still struggle towards the upside. Doesn't have to be all that much higher. I want to see the Dow make a new all-time high. I want to see what happens when the S&P pulls back. Will it go to leg D in the Chapman wave, which it should? Watch the VIX index in the 15s or lower. That's bullish. Starts to get back into the 17, 18 area. Be careful, because that says selling could be rife. Okay, so with that said, don't forget, check it out over the weekend. See if you want to come join me a week from, it's this Thursday night, coming 19th of February for my evening webinar. Stay tuned for Tom O'Brien. Thanks for being here. Have a happy Valentine and have a great, great weekend.